I'm joined in the studio by Autonomy CEO Michael Lynch. Thank you so much for speaking to us. So, as I was saying there, revenues rose, sales rose as well for you, but you missed analyst estimates. What are the challenges in continuing growth in the current economic environment?
No, I think we were bang in line with analyst estimates. If you look at the earnings for the half year, they were right in the middle. And if you look at the EPS, there's a slight technicality in that we quote a very conservative number for our EPS calculated on our convertible bond. If you actually take the formal way of doing it, then we were ahead of the mean estimates and at the top end of the analyst range.
So talk to me then about potential acquisitions. Anything in the pipeline?
Well, we're working on a couple of ideas at the moment, and what we've said is that we expect those to come to fruition in the autumn. So it's something that's very actively being worked on.
Can you tell me what sort of companies you're targeting?
Well, the reason that Autonomy does acquisitions, because software acquisitions are generally a bad idea, given that we have a very strong driver for our business, which is the move to unstructured information, is the ability to produce a defensive ring around that lead position, because the driver is so strong and we're a long way out ahead at the moment. So what we're looking for is situations where by doing it we create more and more defensive walls so that we drive along with that fundamental growth driver.
You get about 70% of your revenue from North America. Would you consider a dual listing in the US?
It's not something we look at. You know, we've had a dual listing in the past, and we found that London serves us very well. So, the situation is at the moment we're very happy with London.
So that's not going to happen it's not a possibility further down the line for you?
All things are possible over time, but it's not something that we're actively looking at.
And you speak about growth that the company's enjoyed over the past couple of years. To what extent has this been driven by your acquisition policy as opposed to organic growth?
Well, the figures speak for themselves. We've acquired about a sixth of the size of the company over the years, and the vast majority of growth on the revenue line has come from organic growth. If you look at the profit line, there's no doubt about it, because the companies that we've acquired have generally not been very profitable. So the simple answer is a little bit of calculation, a little bit of effort, and you can see that nearly all of the growth is actually organic. The acquisitions have been much more about cementing a defensive position when we've taken over a market, so that can be left and moved on to the next market.
And when we speak about deals, the pound has been weakening against the dollar in the last 6 months. How much has that affected your purchasing power in the US?
The way that we work on a cost base is we end up being fairly equally hedged, so it doesn't make much difference. But coming back to your point about consensus, that obviously had a negative effect for us on our revenue. So that was a depressing effect on the revenue in the quarter. If you take out the FX effect, then again we're actually above where we expected to be.
But do you think that it could mean that, certainly looking ahead, you may have less firepower? It may impact on your war chest in terms of acquisitions in the US?
Well, again, we're not financial engineers. We're not doing it to buy growth or anything like that. That doesn't work. What we're doing is strategic deals. So the exact pricing is far dwarfed by getting the strategic rationale right. If you look at Autonomy, we've had a EPS CAGR of about 75% over the last 5 years. That doesn't come about by worrying about those kind of little details.
Well, Michael Lynch, CEO of Autonomy, thank you so much for your time. Appreciate it.